Okay, so are you feeling maybe a bit swamped, just wading through this ocean of crypto trading strategies out there?
Yeah, there's a lot. Charts looking like modern art indicators.
Right. Indicators with names from sci-fi movies.
hmm
But what if there was like a more direct path? Especially now, with all the recent shifts in the Indian stock market.
That's a really relevant point. We're seeing these regulatory changes, right? The bigger lot sizes, different expiry dates for options.
Exactly.
And it seems like it's pushing some Indian traders to, well, explore other markets. Crypto's definitely getting a lot of that attention, Bitcoin especially.
For sure. And the numbers are pretty staggering.
They are. Projections suggesting, what, maybe 7 to 8 crore Indian crypto traders,
Mhm.
possibly by late 2025, early 2026. That's huge growth.
It's massive. So if you're maybe one of those people navigating this, looking for a clearer way in, we've got something pretty practical today.
Yeah, we're doing a deep dive, focusing on one specific, straightforward Bitcoin trading strategy.
It's from a YouTube video, Stock Market Education by Mukul Agrawal. And our mission really is just to unpack it, give you a shortcut to understanding a more beginner-friendly approach.
Like a distilled guide, almost.
Yeah, exactly. A distilled guide to get started.
So we'll dissect this specific strategy bit by bit, pull out the key parts, explain the why behind them. Hopefully, by the end, you'll have some, solid insights you can actually think about using.
Okay, let's dig in. The core of this strategy. It seems to hinge on a couple of main things from the video.
Right.
First, the time frame. It's quick, a 5-minute chart.
Yep, short-term focus.
And second, these very specific price levels for Bitcoin, multiples of 500 and 1,000. So levels like 99,000, 99,500, 100,000, those kinds of numbers.
And what's really interesting there, or what the video points out, is the psychology.
Ah, okay.
These round numbers, the 500s, the 1,000s, they tend to matter because, well, the thinking is that big players, institutions maybe, they often operate around these levels.
So they become focal points, like everyone's watching them.
Kind of, yeah. Creates opportunities, potentially traps, too, just based on how people react psychologically at those price points.
Like magnets for price action. Makes sense.
Mm-hmm.
Okay, so we've got the 5-minute chart, these key levels.
Yeah.
What else? The video brings in another tool, right?
It does, a really important one, the volume-weighted average price.
VWAP. VWAP. Okay, explain that a bit.
So think of VWAP as the average price Bitcoin traded at today, but it's weighted by volume. So prices where lots of trading happen count more towards the average.
Okay.
It basically gives you a sense of the day's equilibrium price. Is the current price relatively high or low compared to where most of the trading actually happened today?
Gotcha. A volume-weighted average. All right, let's get practical. When do you actually, make a trade? What's a buy signal using this system?
Okay, so the video lays out a buy signal like this. Price moves above one of those key levels of 500 or 1,000 multiple.
Right. Breaks through 99,500, for example.
Exactly. And this is crucial, that's not enough on its own. At the same time, the price also has to be trading above the VWAP.
Ah, okay. So 2 conditions. Break the level and be above the day's average trading price.
Precisely. That double confirmation is key.
That makes sense. So you've got the breakout momentum plus confirmation that it's generally strong for the day. Now, risk management. What about stop losses? Where do they go?
Good question. The strategy suggests placing your stop loss just below the low point of the previous candle.
The one right before the breakout candle.
Yes. The one immediately before the candle that broke above your key level and the VWAP.
Okay. And for anyone new, a candle just shows the open, high, low, close for that time period, 5 minutes here.
Right. So putting the stop below the previous low helps limit your downside if the price fakes out and reverses quickly.
And the target. Is there a specific target mentioned?
Not explicitly in the part we're looking at, but the whole emphasis on risk management implies you're shooting for a profit that's, bigger than your potential stop loss amount. A good risk-reward ratio.
Makes sense. Okay, that's buying. What about the other side? Selling or going short?
It's basically the mirror image, as you'd expect.
Okay.
A sell signal triggers when the price breaks below one of those key 500 or 1,000 levels. So the low of a 5-minute candle dips under it.
And let me guess. Below VWAP, too.
You got it. Just as important, the price has to be trading below the VWAP at that moment as well.
Okay. And the stop loss for a sell.
For a sell or short trade, the stop loss goes just above the high price reached by the previous candle, the one right before the breakdown candle.
Same logic, just flipped. protects you if it snaps back up.
Exactly. It's all about having that defined exit point if the trade goes wrong, while hoping the winners run further.
The video apparently showed some examples too, right, from when it was recorded. Can you walk through one?
Yeah, absolutely. So the speaker pointed out a moment where Bitcoin hit like 99,593.
Yeah.
Very close to that 99,500 level.
Right.
But crucially, the price was still below the VWAP then. So according to this strategy, no buy signal.
Okay. The VWAP filter kicked in.
Exactly. It potentially saved you from jumping into a move that maybe didn't have real strength behind it yet.
And then a buy signal example.
Then they showed when the price did get above 100,000, and at the same time, it was also above the VWAP. That combination, that was the buy signal.
Pure trigger. Break the big round number and be above the average price.
Yep. And conversely, if the price then dropped back below 100,000 and was also under the VWAP, that would be your cue to look for a sell.
So the VWAP seems like it's doing a lot of the heavy lifting here, filtering things out.
It really is. It adds that extra layer of confirmation. The video also mentions, briefly, range breakouts in crypto.
Right. Crypto can stay flat, then suddenly move big.
Exactly. Huge move sometimes when it breaks out of a sideways pattern. Using VWAP along with these key levels can maybe help you figure out if a breakout looks genuine, if it has momentum for a bigger run.
But we need to be realistic. No strategy is perfect. The video mentions that too.
Oh, absolutely. That's a super important point they made. The speaker said something like, even with a strategy like this, you might only win, say, 7 or 8 times out of 10 trades.
So losses are part of the game.
Definitely. Which is why risk management is just paramount. The whole idea is keep the losses on the losing trades small and controlled with those stop losses.
While letting the winning trades, hopefully, make much more.
And that's the goal. Small losses, bigger wins.
And to protect profits on those winners, there was a mention of trailing stops. How do those work? Quickly.
Yeah, trailing stop losses. So instead of a fixed stop price, a trailing stop moves up automatically as the price moves in your favor if you're buying.
Yeah.
So say you bought at 99,000, price goes up. You could set a trailing stop that stays maybe 200 or 300 points below the highest price reached so far.
So it follows the price up.
Exactly. It locks in profit as you go. If the price keeps rising, your stop rises too. If it suddenly reverses, you get stopped out, but hopefully keeping a chunk of the profit you made.
Clever. Protects gains. Now, it's worth noting this specific strategy, from the video anyway, seems really focused on Bitcoin, right? And that 5-minute chart.
Yeah, that's what was shown. Bitcoin, 5-minute time frame. It didn't really discuss trying this on, say, Ethereum or other cryptos.
Important point. What works for Bitcoin might not work the same way elsewhere. Different personalities, different volatility.
Totally. And they also mentioned the platform shown was Delta Exchange. Didn't really get into the why in the bit we saw, but that was the context.
Okay, good to know. So let's just recap the core bits of this Bitcoin strategy we've unpacked.
Yeah.
You're on a 5-minute chart. You're watching those key psychological levels, the multiples of 500 and 1,000.
Right, like 99,000, 99,000, 500, 100,000.
And the crucial filter is the VWAP. For a buy, price breaks above a key level, and it's above VWAP.
And for a sell, price breaks below a Q level and it's below VWAP.
Stop loss goes below the previous candle's low for buys.
And above the previous candle's high for sells, aiming for a bigger target than your stop.
And maybe use trailing stops to lock in profits.
Yep. And the underlying idea is all about the psychology around those big, round numbers.
Now, the video ended with some really solid advice, didn't it? About testing.
It did. Strongly recommended backtesting this. The speaker used a great Hindi phrase, "Falijili hurrah," from the Elita.
Which basically means, essentially, like, separate the milk from the water. Find out what's real, what works. See how the strategy actually performed on past data.
Verify it for yourself. Don't just take it on faith.
Exactly. Backtesting gives you data on how it might have done historically, helps you understand its potential, maybe its weaknesses too.
And just as vital, they advised practicing, like paper trading first.
Absolutely. Use a demo account, virtual money. Practice executing the signals, setting the stops, managing the trades before you put real money on the line.
Get comfortable with the mechanics, the feel of it, without the stress of actual risks.
That hands-on practice, it's invaluable, builds discipline, builds intuition for how the strategy actually behaves in real time. Definitely sound advice.
Yeah.
Okay, so we've laid out this specific strategy. Now you have something concrete to maybe explore, which leads to a final thought for you, the listener.
Yeah.
Now that you have this specific strategy focusing on key levels and VWAP, What other factors, maybe psychological ones or other technical indicators, do you think might influence how well this works in different kinds of market conditions? Something to chew on as you keep learning about the crypto space.